All right, let's kick it off. This is Venture Investment in Sports Betting. I'm really pleased to be here with Julia Wittlin. My name is John Abbamondi, and we'll just jump right into it.
Yeah.
Julia is a partner at RedBird Capital. And Julia, I think that maybe we start with, how did you get into this space? And tell us a little bit about your background.
Sure. Like most things, a bit of a random walk, I suppose. So I started my career in finance at what was a small investment firm called BlackRock at the time. 15 years later, and we ended up managing $10 trillion. I moved around internally, ended up being a senior investor in our alternative investments division, and was spending a lot of time at the intersection of media and entertainment. And at the time, RedBird was investing into Fenway Sports Group, which owns the Red Sox, Liverpool, some other sports assets, and invested in that alongside RedBird. And then I tried to buy a company from them, or their stake in a company called One Team. And One Team, for those of you that aren't familiar with it, owned the name, image, and likeness of the NFL Players Association and the MLB Players Association. So RedBird put that company together with those players' associations with the idea of actually monetizing their NIL in a market where that was still considered like an early idea. Couldn't get the deal done, got outbid, but ended up seeing what the RedBird team was like and sitting on the other side. And then I ended up moving over to lead our emerging growth strategy. And what excites me about this space is that our most precious commodity is actually time. And so how people spend their time, that intersection of sports, media, entertainment, I think is particularly interesting. I think the convergence of that in culture and fandom and how you monetize fandom, that ecosystem has always been tremendously interesting to me. And we focus exclusively on that value chain. So excited to be here and to chat with all of you.
And I should say, I'm like a referee in sports. It's best if I don't leave an impression and you just remember Julia, because that's who we're here to learn about. But I should have probably introduced myself. So John Abbamondi. I'm not an investor by trade. I'm an operator, most recently as CEO of the Brooklyn Nets and Barclays Center, and now founder and CEO of LongBall Capital. So it's good to be here with you, Julia.
Yeah, I like that.
So as an investor, what is it? We're here at an iGaming conference. What is it that really excites you about this space?
Well, look, I think we talked a little bit about this notion of like community and fandom, and really, I think at the end of the day, how do you monetize that fandom? And what I like about the space, or what excites me, is sort of like where the fast rivers are. As an investor, you don't want to be that salmon that's swimming upstream. And so I think about the opportunity set that exists, for example, in the female demographic, in the Latino population, and sort of all of the opportunity set that really hasn't been exploited yet. You heard from Joey previously at Better, and congrats to them on getting a capital raise done in a pretty tough market. But micro betting, right? So the ability to think about, are there other forms of gameplay that could be monetized? How do you bring the traditional consumer experiences that we've all become accustomed to iGaming? So I think a lot about like on demand. Everything in our world has become on demand, right? You can get food on demand. I don't go to a physical store anymore. I order everything on Amazon. And so how do you take, for example, content and media and bring it on demand? How do you build community within sports? And I think iGaming has just such a huge part to play in that. And so that's probably what really excites me. I think there's a lot of challenges, right? There's a lot of technological disruption. But again, I think there's plenty of opportunity in this space. And really the technological shifts and the consumer shifts that we're all living through, we're going to play a significant role in that part of the market.
So you talked about the challenges. What about the opportunities? Like, where do you see companies that get you excited? Where are the sectors?
Yeah, look, I'd say a couple things. Sometimes entrepreneurs say, hey, I built this company and we do X. But that X is actually, you've created a product or a tool that is enhancing perhaps an existing platform. So I don't actually think that you have to be a quote unquote company. I think if you actually expand upon something that one of the large incumbents is doing that they otherwise couldn't address themselves, you can actually have quite a successful exit. And so I think knowing, am I building a product extension or, an enhancement versus like, is this quote unquote a company that should be standalone? Like that delineation I think can be very hard, but I actually think there's a ton of opportunity there. I'd say the other thing that's sort of interesting, and we'll have to wait and see, but look, the media business, as we all know, is undergoing quite a bit of change. And can you actually vertically integrate where you have a media business and you have content, but you also have sports betting or iGaming on top of that? And how do you make that work? Is it in one app or is it in two? Is that a good consumer experiences? I don't know about you, but I don't want to go into two different apps. I'd rather go be in one. So those types of things I think is interesting. Again, this notion of community. So how do you have not just, for example, I'm betting on this or that, but how do I actually engage my friends in that? I spend a lot of time also kind of in gaming, like video games. And one of the things that's amazing to me is that when you look at the younger demographics, their view of the digital divide versus the physical divide has sort of blended together. And so if I'm watching a sports game, for example, do I have to go to another device? So I'm watching on TV. Do I have to go to another device to actually, place a wager? Like, is that how that should work from a consumer perspective? So I think those are areas of opportunities. And then the other thing I'd say, I was reading this really interesting paper a couple weeks ago, and it said for Gen Z, only call it 20% of the Gen Z population identifies themselves as sports fans. But they over-index on their willingness and propensity to actually spend money on entertainment. And so how do we bridge that divide, right? So will this new Gen Z population say, oh, I root for this team or that team, and I want to wager specifically on this team or that team? Or are they just looking for other outlets of entertainment? And so I think all of those are opportunities. And on the risks, I think it's just important to underscore, like customer acquisition costs, like that's an issue in the industry for sure. And I think a lot about technology companies. So Amazon, 70% of the US market is an Amazon Prime member. Their customer acquisition costs for anything else they launch is effectively zero. So what could they build on top of that? Google is the same way. So Google knows more about you than literally anyone on this planet, which is a scary thought on one hand, but on the other hand, how can hyper-personalized experiences be built for you that really resonate with you as a consumer? I think those are all really interesting opportunities, and there's a host of companies that are really addressing each of those aspects.
So I want to follow up on something you mentioned, which most of us have heard, right? Which is that the younger audience doesn't follow sports.
Yeah.
At least they say they don't follow sports to quite the degree that we did growing up. What do you think that portends for the future of iGaming? Is that a threat, or do you feel like the stuff that we're building here is going to help bring them into the sports ecosystem?
Yeah, so listen, I generally think of threat and opportunity as sort of two different sides of the same coin. And so, this question of like, well, they don't follow sports, but look at the Super Bowl metrics, right? Like that's one of the rare uniting pieces of content that across America, like we're consuming. And so I think the definition of like what is a quote unquote sports fan is going to be different. You may not root for team A versus team B, but you want to be entertained. And so I think that the definition of, okay, I'm going to go buy merch for this team or that team, like that may be a challenge. Whereas on the other hand, I want to engage with this sport as a category could actually, continue to do well. So I think it is true, but again, it's that over-indexing on I'm willing to pay for entertainment, particularly live entertainment or anything that connects me to an experience. I'm probably less willing to say, hey, I'm a quote-unquote sports fan. And so that's the balance that I think, one is obviously, showing up in the data, but also kind of creates an opportunity. So how do you actually take these, whether it's iGaming, whether it's sports, and actually say, okay, we're going to build better experiences around it. I think about like in-stadium betting as an example. Is that a great experience today? Probably could be improved, right? And so those are all the things that we're looking at and investing behind.
You talked about some of the consolidation that's happening
Yeah.
in media, and you talked about exits earlier. Talk a little bit more, if you don't mind, about some of the M&A activity that we've seen recently, DraftKings with Jackpot.com. What do you see there, and where do you think that's going?
Yeah, I mean, look, I think that's actually like a really interesting point, right? You have customers, and can you point them to other behaviors that you can then monetize? And what are you learning about the customers? And are you attracting perhaps a slightly different demographic? I think that type of monetization is going to continue to happen. I think casual gaming, so for example, playing Words with Friends for money, playing Monopoly for money, whatever it is, I think that is sort of unlike the verticalization, which is like media companies having, iGaming capabilities. I think that example is really going horizontal. And I think both types of M&A strategies are going to continue. Look, I'd say the other thing is, again, back to this notion of scale and where we see risk, it's hard to compete with the big guys head to head, right? So, Flutter, as an example, has 7,000 people just working on technology improvements and innovation. DraftKings, I think there was like an equity research report that came out a couple months ago. They did 13,000 product updates, right? And so, the venture and growth dollars are just not going to subsidize trying to compete with those guys head to head. It's just very difficult. And so this notion of perhaps building companies around other parts of the market, whether it's lottery, sweepstakes, you name it, and then having those companies acquire you, I actually think is a very reasonable and logical approach to where is their opportunity. And maybe the only other thing I'd say on the media companies, we've sort of seen the great unbundling, and maybe now we're in the great rebundling. Let's see what happens. Obviously, different drivers, but I was looking and flipping through my own TV, and we have like 10 different subscriptions. And again, back to that, like, is that a great consumer experience? How does that work on the cost structure side for all the streamers and the media companies? And so the model is going to have to change. And again, maybe the last point I'd make is this on-demand consumer behavior that we've all become accustomed to. How often are you perhaps doing something else and you're like, oh, there's 2 minutes left here. How do I consume that content? How do I wager on that content? In that experience, I think that also needs to start to come into play. And we have the technology now to really do that at scale, which I think is interesting.
So it's March, which means college basketball, March
Yep.
Madness. And, I think for so many of us, there's this social aspect, traditionally with offline betting, right?
Yeah.
The office pool
Yeah.
and the bragging rights around the water cooler. How important do you think that social element is or will become with iGaming? And do you see a future where those sort of social media aspects of iGaming become more and more prevalent?
I absolutely think it's going to be critical. And that goes back to my comment of look at TikTok or Meta. They already have all the customers, right? Like their customer acquisition costs are zero, and they're creating these really interesting, again, digital social experiences. And so could they bring iGaming into the fold? So I think if you think about it, at the end of the day, whether it's college madness, sports has one of the very rare unifying aspects of society, right? Bridges the divide between religion, race, and just this amazing ability to connect people. And so if you can bring in that social aspect, and I think that's, by the way, even more important for the younger generations like Gen Z, and then kind of helps to go address the question that you asked about, I may not be a sports fan, but I want to be entertained. You don't want to be the only person at the water cooler who's not involved, right? Like that's the only thing that happens, when the games are playing. Or I think about, the World Cup as an example. I remember actually when I was at BlackRock and the World Cup was on, and literally we had to get like an internal email from HR saying like no one is at their computers, everyone's staring at the TVs, just watching the games, like everyone go back to work. I think it is that social experience that binds us, and the ability to bring in iGaming into that, I think, is actually going to just become more and more critical, especially as the demographics or the cohorts age out, or age up, I should say. So,
I'm going to guess you would be less likely to get that email from HR at RedBird.
Yeah, listen, I will tell you, I probably watch more sports than I have before, but certainly, it's part of the job now, so it's a little bit of a easier story to tell.
Sure. What are some of the left tail things that you're seeing out there? What are some of the...
Yeah, I mean, look, it's funny, we see a lot of left tail things by the nature of, when you're kind of an earlier stage investor, you're meeting with entrepreneurs who are thinking about like what can the future look like, and you have to be a bit of a dreamer to really go after that idea. Look, I'd say the things that we like the most are, as an example, like women, right? Just huge untapped market, a very different motion in terms of, what is it that women like to play, and no one has really cracked that in a way that's authentic and has really driven huge, huge outcomes. I'd say sort of the intersection also of like e-commerce as an example. There's been companies obviously that are focused on this, but we think there's still quite a bit of, quite a long ways to go. I actually just met a company out there that's focused on, AI and what AI can do in terms of, both content and then linking that content to iGaming. And again, those are pretty interesting, like possibilities. So hyper-personalized experiences where, when you log into Netflix and you're scrolling and you're scrolling and you're scrolling, like that's annoying, right? What if you could just feed me what I want, and then, I'm going to go ahead and wager on it because this is like exactly like what I'm into. Or I want to bet on the Bachelor outcome as an example. Those types of experiences, I think those are, I don't know if those are left tail, but we think they're interesting. And then again, back to that question of you're at a game, you're watching the game, you want to wager on the game. Like, what do I do there? Like,
right.
Why do I have to either pick something else up, or why do I have to go somewhere within the stadium? Like, is there a way to make that experience more interesting? So.
Last question, and then if you're willing, maybe we'll leave some time for questions from the audience. But there's a lot of entrepreneurs here at this conference. What advice, other than the things we've already talked about, what additional advice would you give to entrepreneurs in this space?
Yeah, look, I'd say two things. I think if I think about the last couple of years, there's a lot of capital raised by companies, and I think many of those companies are either facing a down round or they're going to have a hard time in terms of funding. And so the advice I always give founders is play the long game. Like, take the strategic capital. Don't necessarily take the top dollar, because you're only as strong as sort of the people that sit around you. So I'd say that's just one thing in general. Whatever sector you're in, I think we would say. I'd say the other thing is, when you sit in my seat, you want to avoid binary risk as much as possible. And we have a hard time investing behind businesses that knowingly, or they would say probably unknowingly, operate kind of on the fringe of a regulatory regime. We actually think regulation is helpful because it helps tell you what the rules are of the road. And so I'd say that's the other thing is I just think it's going to be very difficult on a go-forward basis, especially in a world where capital actually has cost, to kind of operate on the fringe of a regulatory regime, because at some point, the regulator will come for you, and that's a hard place to be. And then, look, the last thing I would say is, I have been wrong a lot in my career. I've met with entrepreneurs and I've said this is never going to work, and you know what? Sometimes it's actually really worked, and I think there is tenacity. I think is the most impressive character trait of the entrepreneurs that I meet. And look, there are investments that we've made as an example where we've said no the first 3 or 4 times. And it's that person's ability to continue to say, well, here's how we're building this out, here's where we've pivoted, that has really attracted us to them. And again, it's knowing the type of partner that you want. We are the type of partner that likes to be involved. Jerry Cardinale, who's our managing partner, says that we don't write investment memos, we write business plans. For any of our LPs that may eventually be watching this, we do write investment memos, but the idea is that we're not just focused on investing and say, hey, we'll see you in a couple years. It's really about, can we build a better business together? And I think sometimes when you're in the entrepreneur seat, it's like, well, I just need the capital today.
Right.
And there's trade-offs there. So.
Why don't we see if there are any questions from the audience? No VC pitches here today, but yes, sir.
I wonder how you guys avoid. I wonder how do you guys treat or avoid the shiny object phenomena that we all pursue, like what's hot, what's next. You know, it happened a lot with like crypto in the recent years.
Yeah.
It's happening again now, I think.
Yeah.
So how do you guys manage that and keep yourself to like fundamentals or what's actually important, what's actually going to be relevant in 10, 20 years? Like, how do you guys treat that phenomenon?
Yeah.
It's a great question.
Yeah, listen, it's hard, right? Because momentum is a real thing. I think we've seen that in various markets. I'd say a couple things on that. One is, as far as an investment firm and like our culture, we've started businesses from scratch with partners. So I mentioned one team, that was a company that was formed with the NFL Players Association, the Baseball Players Association, several other parties, and ourselves. And that was based on an idea that we could exploit these name, image, and likeness in a way that hadn't been done before. And so we zigged when others zagged, but I will tell you, it is very hard. But at the end of the day, I think what we've all seen with these bubbles is that, it's if you get it wrong, you may not survive to fight another day. And so we try to really ground ourselves in, one, just our own experiences of what we've seen. And then secondly, we don't mind being the contrarian. And ultimately, look, the question is, are we going to get paid for the risk that we're taking? And so if we want to follow a momentum bet, we have to really understand what it is that we're getting into. But it's hard to stay disciplined, right? I think, by the way, I think both on the investment side and on the entrepreneur side, filtering is one of the hardest jobs because everyone has advice, right? I'm up here giving advice to some extent. And I think that's true of whatever side of the table you sit on. It's filtering, and sometimes it's what you don't do that is as important, if not more important, than what you actually do. I don't know. Do you have a view on this? I mean, you've managed large organizations.
Nodding a lot.
Complicated.
I'm nodding a lot because a mentor of mine, when I was early in my career, said to me, strategy is mostly about the stuff you don't do.
Yeah.
And I think there's a lot of truth to that.
Yeah. By the way, just one other comment. There is money to also be made in those momentum trades. It's just, hard to know, if you're catching a falling knife or if, you're actually going to be able to get out in time. So, that there are people that play that. That's not my skill set, but to those that do and have done well, you got to give them credit as well.
Other questions? Yes.
Yeah, I thank you both for taking the time to speak to us. Question about you worked at BlackRock for 15 years, and I was actually more just curious to know what it was like for you to kind of leave that massive company after spending in one spot for so long and then going on your own or working at a much smaller fund.
You got to run facilities.
Yeah. So I'll tell you a funny story. I told John last night over dinner. So first of all, I'll tell you, I have a lot of love for that organization. It was an incredible place to work through, for 15 years. It was very difficult for me to leave, just both because I had spent my entire career there and also because, you don't get to be the largest asset manager in the world with, $10 trillion entrusted to you without, delivering not only investment excellence, but also just excellence in terms of your culture. But I left because, when I looked around, just the organization had become large and I wanted to go somewhere smaller that felt more akin to my roots from when I first started at BlackRock. And then I was also really excited about the sectors that we focused on at RedBird and this notion of, investing behind what I think are the most exciting sectors that we focus on. So when I left, I'll tell you that, we were opening up our Miami office. I go to our CFO. I said, David, where's our facilities department? And he's like, well, what do you mean? I was like, well, we're opening up our office. And so, I was going to tell them, here are the parameters in which we wanted to do that. And our CFO looked at me and he's like, Julia, he's like, we're, at the time, I think 70 or 80 people. He's like, you are the facilities department if you're opening up the Miami office. And I kind of looked at him and I realized, oh, because, it used to be at BlackRock, if you needed a new office, you emailed facilities and someone responded and, things kind of, went from there. And so it's been more entrepreneurial for sure. But it's been amazing. But again, I wouldn't have spent 15 years in an organization that I didn't really love. So
I think that's something every founder can identify with.
Yeah. Yeah, well, you're starting your own thing. So how's that been? Have you figured out payroll?
About learning how to set up payroll. So
yeah, right. You used to email some alias, and you're like, please add XYZ person to payroll, and someone responded, and you're like, oh look, that's how it works. But that's actually not how it works, right?
Big companies are a series of black boxes that people do unknown things in them for you, and being a founder is very different.
Yeah.
I think we have time for one more question.
Yeah, so we primarily focus on, call it Series B and later. Now, the definition of what a Series B company is can vary quite significantly, right? It can be pre-revenue, but I think the way we think about it is we're looking at companies that have product market fit, or at least have the beginnings of what looks like commercialization. That's probably kind of the earliest that we would go. And look, the other piece for us is we are in some ways a sector specialist fund. We invest across a very specific value chain. So if we can't add value, we'll just tell you we're not the capital for you. So hopefully that answers the question.
Well, thank you all for joining us, and thank you, Julia, for making the trip up from Miami.
Yeah, thank you very much. It's good to do this. Thanks, everyone.